Social Security has shifted again, and changes like these are getting a lot of attention. If a quiet update this year could mean the difference between you receiving about $2,100 a month and getting far less than you may be entitled to, wouldn't you want to know? Of course you would. But here's the issue. A lot of people watching this right now do not realize that a major adjustment has already taken place, and some of you today may already be receiving less than you should because a Social Security rule update was not widely explained. I've followed federal benefit policy for years, and I have to tell you, what's unfolding in 2026 is unusual. This is not a rumor. This is not clickbait. What we're seeing right now with Social Security payments is something that people have not had to deal with in quite some time. So before you scroll away, before you assume you already know the whole story, stay with me for the next few minutes, because what I'm about to explain could affect how much money reaches your bank account starting next month. Here's what I want you to imagine for a moment. You worked your whole life, maybe 40 or 50 years, paying into the system with every paycheck, with money taken out before you ever saw it. You followed the rules. You waited. And now you're retired, or you're on disability, or you're getting close to that stage, and you're depending on Social Security to be there, and it should be. That money belongs to you. But here's the part that really frustrates me. The system is complicated, sometimes unnecessarily so. The rules change often. And there are millions of Americans right now, honest, hard-working people, who are leaving real money behind simply because nobody clearly explained what changed. That's why this video exists. Because in 2026, something important is happening with Social Security payments, and if you understand how to check your situation, you could see your monthly payment rise into the $2,100 range or higher. But if you are not paying close attention, you could easily miss it altogether. Let's break it down. So what is actually going on? First, let's talk about the COLA, which stands for Cost of Living Adjustment. Every year, Social Security payments are adjusted based on inflation data. You've probably heard about that before. But here's what many people do not realize. COLA does not affect every beneficiary in the same way. The size of your increase depends heavily on what your base payment was to begin with, how long you have been receiving benefits, and in some cases when you first filed. In 2026, the average Social Security retirement benefit is sitting in a broad range, and the exact amount varies from person to person. That is not a made-up idea. It reflects the different benefit records that millions of Americans have right now. But here's the headline not enough people are talking about. Social Security has made structural changes to how certain benefits are calculated, and the combination of recent COLA updates, changes to how delayed retirement credits are recognized, and adjustments to how spousal and survivor benefits are handled, means that many people may be entitled to more than they are currently receiving. Let me say that again. You might be owed more than you are getting right now, and the government is not going to call you first to point that out. Now this is where things get especially important, so I need you to pay close attention. There is something in Social Security called an underpayment. It is exactly what it sounds like. A situation where SSA made an error, or a rule is applied retroactively, and they owe you money. The Social Security Administration has acknowledged that it processes large amounts of underpayment corrections every year. Most people assume that all of this happens automatically, and sometimes it does, but not always. Here's the part that is easy to miss. If there was a calculation issue in your benefit, maybe because of how your earnings record was processed, or because of how a spousal benefit was applied, SSA may have flagged it internally. But if you never follow up, some of those corrections can sit in a backlog for months, or they may simply not get prioritized. This is especially true if you claimed benefits early, had multiple periods of work and disability, receive a spousal or survivor benefit, went through a divorce before retirement, or had earnings from a government pension that affected your Social Security through something called the windfall elimination provision. And that provision was recently changed by law. Wait, did I say changed by law? Yes, and that is one of the biggest Social Security stories people are only starting to understand. Here is the real reason this video is titled the way it is. The Social Security Fairness Act, which was passed and signed into law, removed two provisions that had been lowering benefits for millions of Americans for decades. The windfall elimination provision and the government pension offset are no longer in effect. If you have never heard those terms before, here is the plain English version. For years, if you worked in a job that did not pay into Social Security, such as certain state and local government jobs, some teaching positions, firefighters, police officers, or federal workers hired before 1984, your Social Security benefit could be reduced, sometimes by hundreds of dollars each month, even if you also spent years in the private sector paying into the system. And if you were a spouse or widow in that situation, your spousal or survivor benefit could also be reduced. That law has now been repealed. The Social Security Administration is now in the process of recalculating many of those benefits, and, in some cases, paying people retroactively for what they were owed. We are talking about millions of Americans who may now qualify for higher monthly checks. Some people are seeing increases of several $100s a month. Combined with base benefits and COLA, that is how some households can reach the $2,100 and above range that people are discussing online. But here is the catch, and this is the part not enough people are mentioning. SSA is handling many of these updates manually. They are overloaded, and if you are someone who was affected by WEP or GPO and you have not heard from Social Security yet, you may need to be proactive. Let's talk about the mistakes people are making right now, because I do not want you to be one of them. Mistake number 1 is assuming the change happens automatically and that you do not need to do anything. For some people, SSA will recalculate on its own, but the agency has been clear that processing can take time and errors can happen. If you were affected by WEP or GPO, you should be checking your My Social Security account online. And if you have not seen any update after several months, you should contact them directly. Mistake number 2 is not knowing whether you were affected in the first place. A lot of people have no idea they were ever subject to WEP or GPO. They just know their payment feels low, but they assume that is normal. If you ever worked for a state or local government, a school district, a public university, or any employer where your pension did not withhold Social Security taxes, you need to look into this right now. Mistake number 3 is trusting bad information from unofficial sources. And I have to be honest here, there is a lot of misinformation floating around online about this. People are seeing wild numbers being thrown around. Some are promising that everyone will automatically get $2,100 starting on a certain date. That is not accurate. Your payment amount depends on your individual earnings record, your filing age, and your specific circumstances. Nobody should be telling you a flat number without knowing your situation. What is accurate is that a significant number of Americans are now receiving higher payments, and more will be updated as SSA works through the backlog. Let me give you a few real-world style examples so this clicks. Take a retired teacher in Ohio. She spent 25 years in the public school system. No Social Security tax was withheld from her pension, but she also worked part-time jobs and summer work throughout her career, earning Social Security credits along the way. Under the old rules, her Social Security check was significantly reduced because of WEP. She was getting around a modest monthly amount from Social Security on top of her pension. After the repeal and recalculation, her benefit is now much closer to what her record supports. That is real money. That can be life-changing for someone on a fixed income. Or consider a widow in Florida. Her husband was a city employee. When he passed away, she was entitled to his Social Security survivor benefit. But GPO reduced it because of her own government pension. She was barely seeing a small survivor payment. Now, with GPO eliminated, she is receiving the fuller survivor benefit she may have been entitled to all along. These are not abstract stories. Situations like this are happening across the country right now. Now I need to pause and give you a serious warning, because where there is money and confusion, scammers move in fast. In the wake of this law change, there has been a clear rise in Social Security-related scam calls, texts, and even official-looking mail. People are getting calls claiming to be from Social Security, saying they need to verify your information so they can process a new payment. People are getting texts with links to fake SSA websites. Here is what you need to know. Social Security will not call you out of nowhere and demand information. They will not threaten you. They will not ask for your banking details over the phone without a legitimate reason and proper verification. If you get a suspicious call, hang up. If you are unsure, contact the real SSA yourself at 1-800-772-1213. Your My Social Security account at ssa.gov is the safest place to check any updates to your benefit. If there are legitimate changes to your payment, they will show up there. Do not fall for anyone promising to speed up your increase for a fee. Nobody can do that. It does not work that way. The only people processing your claim are SSA employees. Okay, you have heard the facts. You understand what is happening. Now let me tell you exactly what steps to take. Step 1. Check your My Social Security account. If you do not already have one, create it at ssa.gov. This is your most important tool. You can see your earnings history, your current benefit amount, and any notices SSA has sent you. Step 2. Review your earnings record carefully. SSA has been known to make errors in earnings records, especially for people who worked multiple jobs, had name changes, or had periods of self-employment. If your record is missing earnings, your benefit could be lower than it should be. You can request a correction. Step 3. Determine whether you were subject to WEP or GPO. If you are not sure, look at your award letter or call SSA and ask directly, was my benefit ever reduced because of the windfall elimination provision or the government pension offset? If the answer is yes, your recalculation may already be in progress, or you may need to follow up. Step 4. Talk to a benefits counselor. Many states have free state health insurance assistance program offices, or SHIP offices, that provide no-cost counseling on Social Security and Medicare. These are not salespeople. They are trained volunteers and professionals who can sit down with you and help you understand your full situation. Use them. Step 5. Do not wait. This is the part I cannot stress enough. People who are proactive are getting their updates processed faster. People who assume SSA will handle everything on its own are sitting in a queue that could take a long time to clear. Here is what I want you to walk away with today. Social Security is going through a major shift in 2026. The repeal of WEP and GPO alone is one of the biggest changes to Social Security benefits in years. Millions of people are seeing their payments rise, and many may eventually land in the $2,100 range and above, depending on their records. But none of this is automatic for everyone. You have to stay informed. You have to stay engaged. You have to check your account, know your history, and speak up for yourself. The system was complicated before. It is still complicated now, but the rules have changed, and this time, the changes can work in your favor. Do not let delays or misinformation cause you to leave money on the table that is rightfully yours. You paid into this system for your entire working life. Every payroll deduction, every year it was required, every contribution mattered. And what you are owed in return is not a favor from the government. It is money earned through your work. So stay informed, stay organized, and do not be afraid to push for what belongs to you. If you found this helpful, and I truly hope you did, please share this video with someone you know who is on Social Security, approaching retirement, or anyone who may have worked in a government job at some point in their life. Because there are people right now who have no idea they may be owed more, and one simple conversation could make a real difference in their finances. Leave a comment below if you have questions. Tell me your situation. Tell me what state you are in. I read every comment, and I will do my best to point you in the right direction. And subscribe, because these rules are still changing. More updates are coming in 2026. More recalculations, more adjustments, and I will be here every time something significant happens that affects your benefits. Stay alert, because these rules keep changing.